Morning, Steve Free in Chicago with the morning grain comments. Mixed trade overnight, kind of backing off from the highs in the beans and also in the meal. Oil's a little bit lower. Corn's unchanged, a little bit higher, and wheat's now turned lower. Stocks are a little bit lower, while the dollar's higher. Crude is about unchanged, maybe a little bit lower, while gold is lower. As far as the grains are concerned, we had a pretty good rally yesterday in corn and soybeans. In corn, there was talk about strong basis levels as the old crop supplies get tight before harvest. And there was also some talk that a few crop watchers plugged in the recent corn ratings by state, made in some adjustments on early corn yields being lower than expected, especially in Illinois, and came out with a corn yield at 170 and maybe a little bit below. We'll also be watching some of the soybeans. They're not yet harvested, and they're still waiting to dry down and to be harvested. But that yield could also be below the USDA's September estimate. And as far as demand is concerned, we saw some cancellations of U.S. soybeans to China and unknown yesterday. Initially, that was thought to be a little negative. But I think it actually is positive because it shows that China needs the beans. We can't yet get it out of the U.S. Gulf, and that they're paying very high prices to get the last of the Brazil supplies. And I think that the cargoes they bought this week from Brazil pretty much cleans out their exportable surplus. So I think China needs beans, and I think once we get things at the Gulf back to normal, they'll come and buy U.S. beans. The trade also continues to think that USDA is too low in final U.S. corn exports. And so that's another thing that could tighten corn S&D for 21 and 22. Technically speaking, we're up against some pretty strong resistance around the 1325 area in November beans, maybe 544, 550 in December corn. Most of the wheat news is actually positive. You still have dry conditions in Russia. Their spring wheat harvest is almost done. Their crop could be smaller and closer to 70 million tons, which limits some of their export capabilities. The low quality of the European wheat crop also could reduce some of their exports of milling wheat. And so U.S. is not competitive yet to wheat buyers, but at some point, those buyers may need U.S. wheat. This week, when they lowered the Canada crop, that offered some support to the wheat market. And we continue to see mostly dry weather across the U.S. southern plains and Russia winter wheat area, although late next week, Russia could actually see some shower activity. Down in South America, northern two-thirds of Brazil is dry. And again, they're trying to plant their corn and soybean crops in dry soils. And for Argentina, more rain is forecasted there with conditions mostly favorable. So we'll be watching the outside markets, money flow. We'll be watching the demand for U.S. corn and beans, yield reports, and also some of the technical aspects of the markets trying to bounce back from recent lows. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trade day. Remember, always treat people like yourself would like to be treated.